Welcome back, my friends. As many of you may have heard by now, cryptocurrency exchange FTX filed for bankruptcy protection on November 11th. Since then, the entire crypto world has been reeling. There has been at least one other crypto bankruptcy since then. But many other cryptocurrency companies are teetering on the brink of bankruptcy. If you follow the cryptocurrency world, you already know of a cryptocurrency exchange company named Binance. Like many cryptocurrency exchange companies, Binance actually has its own cryptocurrency token. Binance's native token is called BNB. Well, the value of the BNB token just plunged to the lowest since July. And, of course, that comes as concerns mount regarding customer withdrawals. And, of course, ties between Binance and the famously bankrupt FTX. BNB, the coin created by crypto exchange Binance. The value of BNB has fallen 6.5% in the past days and 15% over the last 2 weeks. Now Binance is facing questions over its native cryptocurrency coin, BNB. Specifically, about its ability to handle clawback demands of $2.1 billion in FTX's bankruptcy proceedings. Binance was actually an early and major investor in FTX. And there was a time when it looked as if Binance might actually bail out the rival exchange FTX by buying the company. Meanwhile, the dead carcass of FTX continues to get picked over in a Delaware bankruptcy court. And every day seems to bring some new revelation about FTX. FTX's $32 billion meltdown could result in fraud charges. FTX founder Sam Bankman-Fried is reportedly under investigation by numerous agencies. And FTX founder Sam Bankman-Fried could face prison time. But many now are asking, was FTX a Ponzi scheme? And was Sam Bankman-Fried just the next Bernie Madoff? And if it is, what does that mean for tax filing in the United States? The meltdown in the cryptocurrency ecosphere shows no signs of slowing. But, where will it stop? What is the real value of Bitcoin, Ethereum, and other cryptocurrencies? What does this mean for the US economy? And, what does this mean for the future of the United States? But, before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Investor concerns continue to mount over crypto exchange Binance. Just a month after FTX declared bankruptcy, investors are nervous about Binance. Binance's native token, which is called BNB, has plummeted 15% in the past week. That includes a drop of over 6% in the past few days. BNB was first introduced to the world in 2017. Actually, BNB is the world's 5th most valuable cryptocurrency token. It has a market capitalization of around $39 billion, behind only Bitcoin, Ethereum, Tether, and USD Coin. The latest conundrum looming over Binance is FTX's bankruptcy proceedings. Binance was the first outside investor in FTX. But Binance decided to sell out its equity position in FTX last year. Binance sold its stock in FTX for $2.1 billion. Binance CEO Changpeng Zhao has been trying to reassure investors. He dismissed concerns that Binance could have that money clawed back. But, FTX is winding its way through bankruptcy court. And, nobody really knows what is going to happen. Trustees are trying to retrieve any fraudulent conveyances made by FTX to outside businesses or investors. We are financially okay, Zhao said. Investors are concerned that Binance might not be able to handle a $2.1 billion demand. As you might expect, crypto company CEOs don't have the credibility among investors that they once had. So, they are naturally skeptical of comments from top executives about the financial health of their companies. For example, it was only a little over a month ago that FTX founder and ex-CEO Sam Bankman-Fried said reassured the world that FTX's assets were fine. Well, now it is clear that FTX executives knew it was in the middle of a liquidity crunch. And that is what eventually tipped FTX into bankruptcy. Sam Bankman-Fried was famously arrested this week in the Bahamas. He was charged by U.S. prosecutors with fraud and money laundering. Withdrawal demands are another thing that all financial organizations need to contend with. Binance CEO Changpeng Zhao said that $1.14 billion of net withdrawals took place on Tuesday. But he added that $1.14 billion was not the highest withdrawals we processed. On Wednesday, Changpeng Zhao said that the situation had stabilized. The withdrawal number on Tuesday reached as high as $3 billion, said blockchain analytics firm Nansen. We passed this extreme stress test because we run a very simple business model, continued the Binance spokesperson. We hold assets in custody and generate revenue from transaction fees, continued the Binance spokesperson. Binance did not provide an immediate explanation of why the value of BNB fell so suddenly. Let's not forget, Binance and FTX were intimately connected. Zhao announced publicly that Binance was liquidating its position in FTT, the native cryptocurrency of FTX. That was the event that tipped FTX into bankruptcy. Since then, both FTX and its wholly owned hedge fund Alameda Research declared bankruptcy. If you follow this channel, you know that FTX then faced an immediate surge in withdrawal demands. And that was when Binance offered to rescue FTX by buying the company. Binance backed out of the deal because FTX had issues that Binance could not resolve. Like all of the major crypto companies, Binance developed its own currency, called BTB. According to Binance, people can use BNB to pay for goods and services, settle transaction fees on Binance Smart Chain, participate in exclusive token sales and more. Binance actually promotes its native coin BNB to be used for travel and entertainment. Right now, there are about 160 million BNB in circulation. If you follow this channel, you already know that Sam Bankman-Fried is the disgraced former CEO of cryptocurrency exchange FTX. And you probably also recall that FTX was worth $32 billion just a few weeks ago. Silicon Valley's top venture capitalists, like none other than Sequoia, as well as A-list celebrities bought into his act. But Sam Bankman-Fried has been on something of a press junket in the past few weeks. At least $8 billion in funds from customer accounts are missing. Apparently, the $8 billion was used to backstop billions in losses at Alameda Research. Alameda Research was a hedge fund also founded by Sam Bankman-Fried. Both FTX and Alameda Research are now bankrupt. Sam Bankman-Fried has spent the past few weeks on a press tour from a remote location in the Bahamas. He is basically emphasizing his own ineptitude as a businessman. Largely, he is blaming FTX's collapse on the lack of risk management. He is also blaming Caroline Ellison. Caroline Ellison is his hand-picked CEO of Alameda Research. And his former girlfriend. Bankman-Fried is claiming that he did not know how extremely leveraged Alameda Research was. Truth be told, he is claiming that he didn't know about a lot of things going on at his vast empire. But he categorically denied committing fraud at his crypto exchange. Fraud is the kind of criminal charge that can result in long prison sentences. The central question is whether Bankman-Fried led FTX customers to think that their money was available. And, specifically, that it was not being used as collateral for loans or for other fraudulent purposes. But, the lack of apparent action by regulators or authorities is infuriating industry observers. Not to mention those who lost their money. The stunning collapse of FTX and Alameda Research blindsided basically everyone. It also took customers, venture capitalists and Wall Street analysts seeming by surprise. Both of Bankman-Fried's parents are established Stanford Law School professors. But Sam Bankman-Fried could face quite a number of potential charges. That includes both civil and criminal charges. There could also be private lawsuits from the list of millions of FTX creditors. Sam Bankman-Fried also founded crypto hedge fund Alameda Research. And Alameda Research allegedly commingled FTX customer funds with its own trading funds. That is the area of most interest to investigators in the bankruptcy court. So, it is fair to say that Sam Bankman-Fried actually controlled Alameda Research. And I think that he selected Caroline Ellison to be the CEO of Alameda Research just so that he could control the company. How could he not be aware of that state of the balance sheet of Alameda Research? After all, the two were not just personal friends, and maybe romantically involved with each other. But it has also been reported that they were actually living together in a penthouse in the Bahamas. Personally, I do not believe that any of the creditors will be made whole. In fact, I think that they will have lost everything. Bankman-Fried claimed he was unaware of the nature and extent of Alameda Research's exposure. Now, the holders of FTX stake are coming clearer. And, surprisingly, there are some pretty big names. But that was the subject of other videos on this channel, and maybe future videos. The crypto crash rages on. Cryptocurrency projects have collapsed and bankruptcies have occurred across the crypto industry. Warren Buffett, CEO of Berkshire Hathaway, has repeatedly said that cryptocurrencies are worthless and have no intrinsic value. Buffett says that cryptocurrencies have no value in the economy or to society. He clearly thinks that the current crypto winter is a prelude to the eventual death of cryptocurrencies. In January, few people would have predicted that this crash would happen. Regular people who never even traded stock were suddenly active in crypto trading. But, what do you think? Please hit the like button and leave a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.